rising, the charts are bold. Daily bands rapping stories untold.
What's up, guys? We're back.
Midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud. Future kings spinning on their cloud. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Charts, midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with your AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, tracking the charts. Midnight glory. Sanctuary in all its blending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless.
What's up, guys? Welcome, welcome. All right, let's get back to it. What's up, friends? All right, we're back at it. Now I'm starting to realize I don't know if I can stream all day like this all the time, man. My voice is like hoarse. I'll probably talk too much is what it is. Welcome, guys, back to the channel. I probably need to like can't even hear this anymore. To talk a little bit less. Looks like we ran all the way up to upper duty band today, which is crazy. Big news, markets sold off on bombs going overhead. We had some inside information from the bases themselves. Somebody from the My Funded channel knew somebody in the bases that said that they heard explosions, but nothing hit the base. Nobody got hurt. So that the missiles were intercepted out of the sky with Patriots is what they said. You used to jam. You're getting so much more confidence in the system as observe and trade my little micros. You're loving it. Awesome, man. Used to trade off of Jex and Dex graphs. I love the Rocksphere stuff. We're like the enhanced version of what that stuff all is all about. Jex and everything was a step in the right direction. I mean, we are like, I tend to, tell you guys anything related to gamma exposure is amazing. Now we are the undisputed kings of the gamma exposure world. Our technology is absolutely superior to anyone else's for many reasons. And we're number one, the only group in the world that has a retail program that can isolate dealer options from the mix. Most gamma exposure is just the entire open interest. Actually, all gamma exposure is that. Ours is dealer only. We have a model and we had to build a whole trading platform to support the model. So We are the undisputed kings in that world. Gamma exposure is great. I can predict volumes, exactly what it's designed to do. But not a lot of it's good. A lot of it's just noisy. Well, we have volume pivots. Today was such easy trading, you guys. I don't know if anybody had a tough time. Monthly hedge pressure, long once, long twice. There's equities hedge pressure, long again. Liquidity pocket, long again, long again. Bull zone break to yellow, bull zone break to yellow. I mean, this was like super textbook. Even the market's crashing, I'm like, oh, let me grab a long. I'm on my funded TV, grabbing a long right here. Pretty nice, right? Can't complain. Hit up XQC and asking me how he does it. Oh yeah, that's true. The guy streams for a long time. Afternoon, what's up, guys? We also had that circus at the actual missile on stream. Mike is saying, imagine chilling in your jerk station and then the sirens start blaring. That's funny. Monthly hedge pressure is the maximum gamma exposure of options sold by dealers to the market makers of the underlying. Dealer option gamma exposure. Options dealers gamma exposure. Gamma maximum. So it's maximum. Maximum gamma means maximum delta hedging. Maximum delta hedging means maximum order flow due to hedging, which means volume spike. Fancy word. When you hear people say gamma exposure, what's the whole point? Why does people even care about gamma? Gamma is equal to the derivative of delta relative to price. Which is equal to, what's a little math here? So the gamma is this nasty, weird equation. What does all this mean, right? So the change in price of the underlying versus the option divided by the change in price of the underlying, there's a difference. The option goes up and the price under the underlying goes up, like SPY and SPY options. Then as that price gets higher, that change gets higher, then that's known as delta. When that change is curving, like it's exponentially going higher, that curvature is reflected in gamma. So gamma is the second derivative of this whole thing. Second partial derivative. And what it is basically is just a fancy word for when the change in price of the underlying is outpacing or price of the option is outpacing the change in the underlying, then you have delta hedging opportunities. As the delta is going higher, then you're going to buy more shares of the stock. So your options going up in price, but the delta is going to instruct you how many more shares you need to buy to hedge, especially if you're sold that option and it's going against you. So delta tells you how much to hedge, and gamma tells you how fast delta is changing. So if delta equals hedging and hedging equals number of shares, and gamma is the speed at which delta is changing, i.e. the acceleration of the amount of shares you're buying. So acceleration is clearly seen as an amplitude change with curvature in the options in the underlying volume. So the acceleration is picked. Anytime something accelerates, it's curved like this, right? It speeds up as it goes. So volume accelerates. So gamma exposure just means, in layman's terms, volume acceleration due to hedging. Pretty cool, right? So like, I like to make sure I could teach you guys boring fucking differential equation mathematics into a way that's more easy to understand. It's volume acceleration. That's all it is. So your volume amplitude picks up very rapidly with curvature. And your maximum gamma, max gamma, is equal to max volume. So it means volume spike. And that's really what gamma exposure is supposed to do. Which funded one do I recommend? My funded futures is good. Straight, they don't have straight to funded. If you're talking straight to funded, Tradeify and ETF are really good. Bum bum. When I'm with the band, what's up, man? Is it a pivot or just resistance? It's a pivot both ways. We see it as a resistance when you bump into it, clearly. But see, as you see, it's not really predictable to pivot. So when you're trading this, we just normally exit along at the orange, I mean at the yellow, and exit along at the yellow. We don't necessarily try to short off of it or try to long off of it because the direction seems to be random. We just know that when you get there, there's volume. And it's all relative to the event that caused it. See, there's the volume as you approach it there. There's the volume as you approach it there. We just know it's volume. So I usually trade from volume to volume. I usually use it as an exit target. The bootcamp starts today. If you're going to join, you have to join today or wait 2 months to join it. So we start today at market close. All right, I'm going to go grab me a bite to eat and chill. You guys just hang tight, okay? And just watch the market. For now, no trade setups. Upper DD band is where we push to, and this is kind of like the exit target normally for the day anyways. I'm kind of maxed out in profit on all the accounts I'm trading, so I can't really make any more trades anyways, but I'll be right back. Hey, friends. IDOC makes this amazing bread, and I made me some toast with cheese on it. Like very thick. I put some cheese on it. Ooh. It's like rosemary bread. Ooh. You guys are shorting from Upper DD Band? Really? Tell me more. I'm out of breath. 3 flights of stairs. Run up, run down. All right, guys, our boot camp's starting today. Don't forget. Whew. I'm definitely in shape. That's just still a lot of running. All right, so here, I don't think there's any more extra move like that we can see. Usually upper DD band is the final target that I go for. S&P still has a little bit more juice. We ran through liquidity pockets all day today. It was nice. I'm going to try to keep my voice like down a little bit. I don't know what it is, but I'm talking way too much and I'm starting to get hoarse. I don't want to damage my vocal cords. So I need to do some research. Anybody out here is a professional singer? Any of you opera singers or something? Is there a trick? Is anybody a news anchor? Talks for a living? Reporter? There are tricks you can do to kind of maintain. Feeling we can short power hour, somebody says. You have a feeling? Can I elaborate a bit about the boot camp? It's for people who don't have Rocket Scooter. It's for both. We do teach Rocket Scooter principles, but it's for people that watch the stream as well. It's great if you have the platform, but if you don't, at least make some sense about what I do on the stream so you can follow along much better. And the principles that we teach in it are pretty universal. It doesn't require the platform to understand some of the principles we teach about risk position management. So you don't have to have the platform. It's obviously recommended, but you don't have to have it. Raw eggs, ginger and honey. Yeah, you'll ask your wife, Pat. She can't stop talking. LOL. Honey's drops. Warm lemon water with a little honey. I don't want to get sore throat. I don't want to get like super hoarse, you know? All right. Do. All right. A shot of oil. That sounds cool. I think Mike has the most the best solution. Gargle warm bacon grease mixed with banana pepper brine. Every part of that sounds like it would make my voice worse. How much of this chop is algo? I think right now the market's just kind of trying to digest what happened. Obviously, like, we shot the missiles out of the sky, according to sources that we have. Somebody from my Fended stream has friends in the bases that said that they didn't get hit, which is good. You were the lead singer of Stillwater? Really? Really, Joseph? Nah. Maybe try adjusting your mic so you don't have to speak so loud. Well, I don't think I have to speak loud. I think it's just talking all the time. Throat coat? Oh, dude, I have some of that throat coat. It tastes like poison. But it works. Dude, it's awful, but it works. I have some of that. That's good. I should probably try it. It is not tasty. It tastes like ass and battery acid like mixed together. But it works. Yeah. All right. What are you going to do today? Add honey and lemon. Yeah, no, like seriously. It's like the kind that I have, the throat coat, was like very, it's like antiseptic almost. It's like really bitter. Meth will work, yeah. So I'm waiting to decide, is there any other trades we can take? Yellow line is a pivot. It's not necessarily a strong pivot either direction. It's mostly seen as 50-50. So, but there is a little bit of squeeze from here from 60.56 all the way to 60.83. Could be another 30 points to rip. What's that upper band? So we'll see how that works. Gargle saltwater. The last throat coat you had very sticky. Tyler, stop that. You stop that right now, sir. Whatever side's coming from is resistance. It's usually, right, it's just volume for both sides, right? It's resistance both ways. Like right now it's breaking through and holding it, so it's looking pretty good. So question a lot of people have is like, you know, are they going to short or long from this yellow line area? I mean, this upper band area. And so right now the ratio is 64 on the stocks, which is bullish enough to not short this. But doesn't mean there's not possible opportunity there. If I were bearish, that's where I would short from, but I'm just not bearish. Not a terrible idea though. Tyler, hilarious. Total profit today, 11,500 today. Across all the accounts in my fundeds. DDBN numbers posted in Discord, Moose? No, they're not. They're just posted here. They're just on the platform. They're not posted in the Discord. Yaml Trace turned 33 today. Congrats on your birthday, Ed. Happy birthday, buddy. I set max tariffs on coconut oil. Hey, Barry. So our bootcamp goes over 3 major principles of day trading, which is trend identification, position risk management, size management, and then market avoidance strategies. We teach you how to do volume prediction, which is finding volume pivots, utilizing some very clever techniques. No one does anything close to what we do. We exploit multiple things like market maker options landscape to find volume pivots. Some of them are high probability. Some of our setups are 90%, 80% win rate. We provide all the stats and evidence and backtest results of that. And we teach you why everything works the way that it does. We basically just teach a no multi-time frame, no overlay chart indicators, nothing. It's just a pivot-based trading analysis looking for volume. And we have 15 different tools to find volume. We have ways to do confluence in the index products so that we can see if the index are properly tracking the stocks or not. And then arbitrage trading. So all of that together, like these indicators are following what the stocks are doing all at once. And so is this stuff up here. And if the index is doing something different than the stocks, creates an opportunity. All of it together creates a series of, let me show you. Hold up. What's up? I thought you were working.
I was.
Oh, my neck hurts.
Why? Oh.
Like right here, I slipped on it wrong. Every time I turn, it hurts. Blah. Oh, that feels nice. Yo, can we get a massage today?
Yeah, we can after I do my lashes and nails.
Heck yeah. All right. Thank you.
Wait.
Oh, yeah. Don't show. Hold on.
Wrong one.
What? They don't show that.
That's why I was like going down here.
Here. Hide that.
I put it
These
in
people be opening.
my bras. Just kidding.
People be opening credit lines, and my name Tyler is here. He's gonna steal my number and open it. He'll get a credit card. Ah, yeah.
That's good?
Oh, it feels good.
How's your day?
I'm gonna massage later. Pretty good. Pretty good day. You just smell my head?
It's a Vietnamese thing.
Do I smell bad?
No, you smell amazing. It's endearing.
I know.
Bye. See you later.
All right. See ya. One of the first things that we teach is our class is called Edge and Probabilities. So basically what we teach you, and if old or new trader alike, you're going to learn a million things that you probably, some of it you may know, some of it you haven't. So one of the things we present is our thesis here on like, you know, how much of the market's green or red. We have a lot of statistics and neat data that we give you in our courses just so you can actually see the numbers that go with it. Probabilities of some of our setups are presented here as well. These are, you know, like this setup is 68%, the setup 73%. How we find basically in the options landscape, we can find things called liquidity map, which is a way to see which direction the natural flow of the market is based on the option structure. It natively has a push in a certain direction based on the way options are lined up. And so we can utilize that to find flow and volume. An example today's liquidity map, as you see, is up, right? The actual map is pointing upward. The trajectory today has been up since we've entered this area right here. You can see that there is support off of this blue line, just like the thing shows me. There should be support off of the blue line. It's pretty good at what it does. Nothing can predict the stock market, but this is just assuming that under normal conditions, there's not enough natural noise in the market to completely destabilize all this structure that's built into it. So under normal conditions, or like today when news takes you to pivot, even the pivot itself was able to provide the counter liquidity to the news selling, right? iDoc is a paid actor. I hire her to come in once a day to pretend to be the girlfriend. It's part of it. iDoc just acts weird and just blames it on being Vietnamese. Yeah, she's just naturally weird. Do I work out of the USA? I do. Yeah. Is it live recorded? Can you watch it later? Yes, you can. You can watch the videos at whatever your leisure. We're predicting the stock market. We're predicting volume. Volume should be. What's up, Banana Bread? What's up, my brother? That's right. Hard to predict the direction of the market. Our philosophy is that's hard to do, but it's easy to predict where volume will be. That's a whole different animal, which volume prediction is actually much more consistent than price prediction. You can't predict the price action, but I can predict where volume will be very accurately. So it just basically means whether I'm right or wrong on the price. Erase every other thing you do. At least you know where you want to enter the market at. That's what's important. Whether you're right or wrong, at least you're right or wrong from the right place. Like make my bets where it matters. And then use whatever else to find direction or to predict direction as much as you can. Let's go with that. How's ETFs direct to funded? It's really good. The rules are I think the rules are good. This unique. They have this like 62% rule. Basically, like your trading day to count has to be at least a certain amount of your total balance. It forces you to trade consistently for it to count. Every direct to funded program is going to have a consistency rule. They all approach it slightly different. ETFs is unique for sure. Oh, yeah, I'm in the US. This one's Vietnamese. Her family's from there. Well, we live here. ETF just recently got rid of a lot of their rules, though. You can micro scalp, you can DCA, you can do all that stuff now. They're trying to be very competitive with their direct to funded. The last round of changes, when they have a sale, which they do right now, I think it's still 65% off. I think it's still going on. Use our code; it should give it to you. It's actually a better deal than Tradeify in the moment. You get a little bit more bang for your buck. Their consistency rule is different. Like other consistency rules would be as follows. Like imagine that Tradeify is 20% off, 20% rule. It means your biggest trade can't be more than 20% of your total. Okay. So say that if I have to make $10,000 at 20% consistency, which means I can only make $2,000 per trade. What happens if I make over 2,000? What if I accidentally make 3,000 on one trade? Well, if the same rule applies, your biggest trade can't be more than 20% of your total, then 20% of your total equals 3,000. Therefore, your total becomes 15,000. So what happens is your goalpost gets moved whenever you go over your consistency limit. The amount of trading you have to do has to go further. You have to go further in the account. ETFs is slightly different. The balance will stay the same. It's just for the day to count your minimum balance. So with Tradeify, there's no minimum balance. The maximum balance moves. Okay. You can trade for $1 and it counts as an active trade day. You need to trade for 10 days to get a payout. ETF is 15. For a day to count for Tradeify, you just need to open and close a position. That's it. But they move the goalposts on you when you break consistency. With ETFs, they don't move the goalpost. Your target's still the same. However, what they do is they raise the minimum. So while Tradeify raises the maximum, ETF raises the minimum. For it to count, you can't just open and close a trade. Your minimum trade needs to be X% of your total or something. I think it's of your biggest trade, actually. So I think it's like whatever they call the 63% rule or whatever. Your trade has to be at least that size of your biggest trade for it to even count as a day. It will count towards the balance, but it won't remove a counter from the total number of days. So what they do is they make your minimum get bigger if you have a big blow up day where you made a whole lot of money accidentally. You don't have to have a bigger target. You just have to have bigger minimum days. It's a unique way they do it. They both make you trade. The goal is they both make you trade longer when you go over the limit. It's just theirs. They make you trade a bigger minimum day. Here, they make you trade more days. So, which one is better? I really can't say one is better over the other. If you trade consistently, you can beat both of them with the same strategy. If you have a big blow up day, both of them will make you trade extra days. Maybe. Tradeify will make you trade extra days. ETF won't, as long as you're consistent with the rest of your days. So there's really no better or worse. It just seems different because people aren't used to seeing their unique way of doing it. So it's a sticker shock. People go, oh, 63% consistency. That sucks. Well, no, it's not the same type of consistency. It's not, you know, and if it was, that'd actually be really good. It's actually the minimum balance. How do I explain end of the day drawdown? Yeah, it's pretty simple. So if you guys are using like my funded futures or funded next that have end of the day drawdown, we have codes with both of those. What happens is you have a starting balance here and you have your maximum loss limit here. Okay. At the start of the day, the maximum loss limit is X distance from your starting balance. And then no matter what your balance is throughout the day, say that it closes here at the end of the day and you're starting on day number 2, your maximum loss limit is the same X distance from your starting balance, but it just moves once a day. So throughout the day, it's static. It's not moving at all throughout the trading day. And then every night it'll reset one time to be a certain distance from your closing balance at the end of the previous day. So as opposed to a static account, which has a loss limit that stays put forever, no matter what your starting balance is, day 1, day 2, day 3, day 4, your static limit stays the same in a static account. These are the best you can get, but they're very expensive relative to end of the day drawdown. End of the day drawdown will move with you once a day, and then it becomes a static for the remainder of the session. So it just like jumps one time. And trailing drawdown moves with you in real time, which is like the worst of the accounts out there. If I would tell you guys, if you have trailing drawdown are like basically like penny slot machines. They're for lower costs, right? They're for people that don't want to spend a lot of money. They're absolutely the hardest to trade. If by any way you can avoid trailing drawdown, do it. It's impossibly hard to beat those things. And if you're saving a couple bucks doing them over an end of the day drawdown, it's not worth blowing up multiple times to save a few bucks. I would recommend not doing intraday drawdown. Instead, do end of the day drawdown or static, both of them. Am I open to other ideas of my trading? For example, volume imbalances? I mean, I can be, but the problem I ran into is my trading is so good these days. I don't want to change anything because I've been able to maintain a 75% win rate this year and last year and the year before. I've kind of hit like a solid stride in all kind of markets that I'd really have to find something new and different to try to enhance that further. Like, I don't even think it's possible to get any better, but I can always have better setups. So I'm okay with that. Like a different type of setup. So yeah. Oh man, my neck is like all sore. So an ETF, the one step is their trailing drawdown account. It's the harder one to do. It's also the cheaper one to buy. If you want an easier time trading, comparing the accounts, do the static. Especially if there's still a sale going on, the static is the easiest of the accounts. And I think it's still 65% off. How is Apex's 100K static account? Never, never, never should you ever buy the static account from Apex. ETFs is cheaper and it's 3 times better. Apex gives you a tiny, tiny, tiny little drawdown of 625 bucks. Okay. For roughly the same cost from your starting balance. That's at 600 bucks and you blow up. That's it. ETFs is 2,000 for pretty much the same cost. It's 3 times better. You're gonna, when they have a sale on it, ETFs is the best in the business for static. I wouldn't touch I honestly, to be honest with you guys, I wouldn't trade Apex at all anymore. They have 2 account types. One is trailing drawdown, and they're doing all these rule changes with it. Everybody that wants trailing drawdown is using take profit now, and they're amazing. If you want static, go to ETF. They're both better than Apex. I wouldn't trade Apex. Banana Bread's is starting a new firm where you give him $2,500 and he gives you a live $200,000 account with no rules. Dude, that's a good idea. There you go. So I love the idea. I'm going to give him $2,500 so that he can give me a $2,000 trading account. This is brilliant. I bet you if you started a website with that, people would actually do it. Give me $2,500 and I'll give you a $2,000 brokerage account. And I'll just keep $500. Zero risk for me. Yeah, exactly. And if you win, you get to keep 100% of your profits. Even better. No profit split. I bet you one person would fall for that. There will be people that will fall for that. It would be, I bet you if you had a website like that, you might get some sales because people won't even read what they're doing. They'll just see numbers and be like, oh, live account. You can call it, hey, you should call your business like, we're the first people to take you direct to live. Forget direct to funded. It sells itself. Forget straight to funded. We send you straight to live. Easy as that. Skip the eval, skip the send funded, 100% live profit. All you have to do, sign up now, $2,500. We'll give you a $2,000 brokerage account. No rules, trade at your own, no risk, no profit split, no anything. And it sounds so cool on paper, right? In reality, if you guys aren't catching the joke, he's just basically stealing $500 from you. And I bet you it would sound so cool in an ad, people will buy it. They don't even know what they're buying. So he's basically opening a brokerage account for them and pocketing $500. That's hilarious. Include the banana bread jersey. There you go. You're in. There is no micro scaling rules at ETF anymore. Yeah, and so start a new. Somebody's asking, if you blow out 1,000 in a trailing account, you're going to blow it in a static account too. Not necessarily, no, because a static account allows you to account for previous made gains in the day. So example is, here's two different accounts. One is static, one is trailing. Okay, at the start of the day, say that you've made $2,000. Okay, and you already had $1,000 to your drawdown. You made $2,000 in profit. And your starting balance already had $1,000. You have $3,000 of fat before you blow up. In a trailing drawdown, say that you made $2,000 and your trailing drawdown is $1,000. It doesn't matter how much you've made. You can only lose $1,000 no matter where you are in your P&L for the day. So in static, your previous gains give you extra fat. In trailing, it doesn't matter if you made $10, $0, or $1 million, your trailing drawdown is still going to be the same tight limit off of the high of the day. So news events are most easily survived with the static account, then an end of the day drawdown next, and then trailing drawdown after that. Trailing drawdown is moving in real time. Static stays put. End of the day drawdown is a hybrid of the two. It's static throughout the day and then shifts once a day and becomes static for the next day and then shifts once a day. Got some daredevils in here long in the S&P. Last hour of the day, you take into 60.83. That's good. Can I explain consistency rule? Yeah. So with consistency rule in general, I'll use TradeFi as an example. They have a 20% consistency rule. What it means is no single one of your trades, let's just put a bucket here and call it total. Okay. No single amount of your trades can be greater than 20% of the total. Okay. So the total they may say is you need to make $9,000 in trading. at 20% consistency. So all you do is do 20% of 9,000. Okay. Equals 1,800 bucks. If you were to make $1,800 a day, 5 days in a row, then you made 9,000 at 20% consistency or less. It means less than 20%. If you happen to make, so essentially your biggest trade can't be more than 20% of the pot. As the pot gets bigger and bigger, your trades together must be less than, each trade must be less than 20% of the total. So your profit target is the total you're going for. If you're trading to 20% of 9,000 and you happen to make 1,000, 1,000 is 1/9 of your total you need to get. So if you made 1,000 times 9, then each one of these is like 9% of the total, which is good. Say I made $1,500 on the second day. $1,500 again is less than the 1,800, so I'm probably not going to have any problems. But if I happen to make 2,000, here's a problem. Once I get to the 9,000 target, 2,000 is 22%, right? 2 over 9 of the total if I get to the 9,000. So therefore, it's disqualified. So what they do is they increase your total. If I happen to go over what I need to, if I have a $2,000 day, then my new total extends a little further. They make the total that you have to make a little bigger. So if I happen to accidentally make $2,000, then to satisfy the previous condition of no single trade can be greater than 20% of the new total, then the new total becomes 10,000 instead of 9,000. They extend your profit target another 1,000 because 20% of 10,000 is your 2,000. So now all of your trades need to be less than 2,000 at the new total. And as long as you stay under 2,000 and get there, you're fine. If you happen to accidentally make 3,000 one day again in the same path, then your new total becomes 15,000. Remember, 20% of X equals your biggest trade. Therefore, X now becomes 15,000. So basically, when you start off, what you do is you take your initial consistency, your profit target divided by consistency. If they say it's a $6,000 profit target with 40% consistency, okay, then that's $2,400, right? Is 40%. If I made 24, and 1,200, that ends up to 6,000, and no single trade is greater than 40%. So again, you take your profit target times your consistency, and there's your max trade size. If each one of your trades is less than or equal to that number, then you're good. If one of your trades goes over, you just need to calculate your new total. If I happen to make 3,000 on accident, oops, I went over 24. Okay, so now 40% of X equals 3,000. That becomes what, 7,200, right? Whatever it is. So, or whatever, actually, 40%. If I do 3,000, 3,000 divided by 40, 7,500, not 7,200. So your target just gets bigger, which means you got to trade a little bit longer. Apex's static is not $27, Sean Michael. It's 27 for eval plus 120 or whatever it is for activation. Granted that you pass, you still have to pay to go to funded. And also whatever it is, I don't know if it's like 120, I think, or 140, one of the two. And so not only is that drawdown dog shit, once you go live, you can blow it up the very first trade. They went up to 160. Are you kidding? Holy shit. So Apex went up. Okay, so it's 180 now. Yeah, there you go. And plus a 625 drawdown is just complete dog shit. You can't navigate a trade with such a small amount. Gwib, does that help you out? Okay, cool, man. Glad to help. Dang. Would be better for a long-term play, but you would do massive days. You could take bigger lot sizes. Yeah, if consistency moves and you just trade bigger going forward, that's also. Tyler says leave his Apex. Well, they know they need to they need to do something. Apex is struggling now. They're struggling ever since Jade Cap and those other dudes took their big old payouts. They have just been, I don't know why. Like I thought they had like tens of millions of dollars in profit to play with every month. Like why they be sweating? Like it's not like they're doing huge cash payouts all the time. Any specific strategy I use? Yeah, I use volume prediction, gamma exposure, volume prediction, and arbitrage. I find high volume pivots and I can easily trade them. On ETF, the $150 K activation fee is $225 lifetime, but if I spend $39, pay monthly $40. What happens after? Wait, say that again. On ETF, the activation fee is that, but if I spend $39.95, I pay monthly $40. What happens after 3 months? You just pay monthly until you pass, and then you activate it. The lifetime is just a one-time activation, I believe. Yeah. The class is starting today. Will be live. It'll be, we watch the video together and discuss it together. But it's live. It's a live coaching session. And I sit there with you and we go through it together and I talk about the current market. It's really good. Is it weird strategy to pull 150K to 450K balance like Pat did? That's not normal to do that. And it costs a lot of money to do that. When you really think about it, I don't think Pat made much money off of that. When you count all the fees that goes into getting there, minus the taxes and minus the profit split. It's not really like when you're trading Apex that big, you're not necessarily walking out with any more than 40% of what you made. Minus the fee. Well, it depends on how much you spent on the evals and stuff. I'm sure you probably spent, easily could have spent 100K on all the evals and stuff. So for you as a trader, and Pat's a good trader, for you guys, it's not really achievable unless you're putting a lot of, he knows the system, he's playing the system. It takes a lot of money to make a lot of money. For you guys, you're not going to easily do that your first go. To build a big balance like that, you got to go in pretty heavy. You got to hit the accounts pretty hard and you're going to bust a lot. So you have to know that to be able to get that payout, it's going to cost you a lot of money. Class starts at market close. 100K on evals unless you're Tyler, LOL. Yeah. Pat's a good trader, but Pat's not trading. He's gaming the system. He's trading, yes, but part of his strategy is to game the system in front of him. He's good at that. And that's including being a good trader on top of it. And, you know, he's playing the odds of the low risk input that you put a lot into for the big payout at the end. The opportunity cost is there, but after taxes, you know, you lose a huge chunk of that because it's 1099. Let's just round to 40. You lose, you're not effectively all 40, but let's assume you're already a millionaire. You're already making that much money on your income. You're taxed at 37% on taxes. You lose 10% or whatever it is to profit split. There's already half of your payout gone. And then the rest of it has to overcome the amount you put in. So Jade Cap and all these guys, you get $1 million something payout. You're probably pocketing maybe somewhere between 200,000 to 500,000 of it, depending on how good you were in the eval side. What are taxes? It's the less cool spelling of the word Texas, which is the coolest word on the planet. You're not in Puerto Rico. You're in Puerto Rico, Florida. Porto Miami. The best port. Yeah, take a pineapple for yeah. We'll be going straight into boot camp from here. It's a volume pivot. So like if somebody were to short, they'd want to see this break to the short side. If somebody were to long, they want to long off of it. It's a defining pivot for the day. So like today, like if you were to short, it's a good pivot. Doesn't mean it's predicting a short. It just means it's a really solid pivot. If I were longing the market and I lose this yellow line, I would get out of the way quick. It's just strong resistance. So like as the market tries to press against it, it's not going to easily pass through it. It's going to have to fight for a little bit. Yeah. Yes, no problem. You guys are so funny with some of your memes. I'm responding to. Ooh. All right. I've got we're doing this whole remodel of the house now. Well, not remodel, but like essentially we're building like custom furniture, entertainment center, everything. I just got a new TV and I'm getting all the surround sound and all that stuff installed. We bought this house in December. We haven't really had time to do anything. And finally I'm like decking it out. So I went and bought like a whole new entertainment center. I have a media room, like a movie theater room, but I haven't begun to deck that out. So the living room, I went and got a much bigger TV. And the TV from the living room now is going to go into the bedroom, and that bedroom TV I'm going to throw away. I got the Samsung 83-inch quantum dot OLED, like the biggest quantum dot that they had. The 83. It's a boost. My current TV is like 75. So it's a little bit bigger, and like basically we're gonna move the TVs around. I got that, and see, we have this wall right where the entertainment center is, and the wall has essentially like two little windows right there, and trying to figure out what we want to do. And right, and our living room is like a giant L-shaped couch like over here, and we're trying to figure out how we want to do it. So we might actually get the TV mounted and then have the some carpenters are going to come in and they're going to design some like really like badass custom wall. Probably, I don't know, maybe with the fireplace inside. I don't know what we're going to do. Wood, accents, marble, something. They're going to build out this really dope entertainment wall, TV to go in. And then I have got a whole new surround sound system. So I went and got like in-ceiling speakers. I got this gigantic subwoofer, a new amplifier, a new receiver. I got everything. So, you know, somebody needs to take my credit card away from me. That's not cheap. But, you know, like I said, we just bought a new house. So this is like time to start permanently decking it. Some of the stuff I have right now is I've had for so long. I've had it since I had an apartment, like 6-7 years ago. I still have like my same apartment couch, although it's really nice. It's just now that we're in like a house, like it's time to get like adult furniture. I have an entertainment center that's really nice. It's from Crate and Barrel, but it's just like an entertainment center that sits on the ground. Now we're like, okay, we want like custom walled out shelving kind of thing. LG OLED or bust. I mean, I like them both. I have a WOLED monitor over here, and I have a quantum dot monitor here. And I have pros and cons on each one of them. The quantum dot is definitely better and brighter. Its reds are like so vivid, it drives you crazy. But the WOLED is like less upkeep. I like the WOLED a little better because it doesn't have to go through like that shutdown cycling pixel cleaning crap that it does. Restoration Hardware. Yeah, dude. My couch is from there. My kitchen table's from there. My bar stools are from there. We're about to buy a chandelier from there. Or not a chandelier, like a lighting chandelier fixture thing from Resto. I like their furniture style. I think it's cool. You have a Toshiba projector, 65-inch. When it first came out, that was probably huge though. For a funded 50K expert account, what's your, Chris, you always have to figure out what is your actual drawdown in that account. your daily loss limit at your drawdown. Do I need to be a natural to be a trader, or just dedication and putting in the work? Both. Right. Being a natural helps. There's a natural mindset that some people just fall into it a little better, but everybody can learn how to trade, because the skill set is not depending on how tall you are, like in basketball, right? Or how strong you are. The math is simple enough that anybody can do it. The mental game is the hard part, and people have different journeys for that. Some people just walk into trading with this like detachment from money, and they're great at making risk-based decisions and all that. They're not fazed by emotions. And again, that's a product of your upbringing and your environment. Great question. I always tell people that trading, most people are born into it. You're born with the mindset, but it doesn't mean you can't acquire it later in life. You can't make yourself taller to become a basketball player. But in trading, you can unlearn bad habits. For some people, it's quick. For a lot of people, it's long. Not a time. The skill set you're practicing is how to guess at a random thing, which is the market, and use whatever clues and evidence you have to change the amount of risk you're taking, the position size. And that's really the skill set. But it all boils down to like making sure that you have a system to do that, and your emotions and your feelings and all that aren't interrupting your thought process, that you're always betting correctly, where you don't make a mistake once as much as you can. Keep control of everything you do. And that all can be practiced, yeah. There are some people that are born into it. Let me tell you, I wasn't born into it. I entered this game with all the wrong mindset. It took me many years to get over it. But I also somebody that, owns a trading platform, and, we've coached probably 100,000 plus people since we've been doing this. Most of the people who do very well have the same things in common. And, they exhibit characteristics of patience. They're willing to wait for something. They only take good setups. They don't chase the market. They don't see something and feel like they're missing out. If they see a move and feel like they're missing out, they say, I missed out. They don't say, how do I get in? They usually try to get into the trade first to see something others don't see. They tend to know how to cut a trade quickly because they know their system in and out, and they know when there are things they need to line up aren't lining up, and they're very quick to make the decision and detached from the trade they're in to quickly walk away from it and being okay with losing, and then recovering and entering your next trade, not even feeling a certain way about your previous one. Like you don't feel beat up or defeated to where you're timid, you're gun shy on your next trade. That is a really good skill to master, because you'll see me all the time. You'll see me like, I might be down 10K and I might turn it around and be up 5K. How'd you do that, Matt? Well, it's not like I just made a lucky trade and made it all back. I worked my way back little by little. It doesn't mean that I overtraded or undertraded. What it means is just because if you lose 10K in a trade, your second trade, you might be so eager to not lose further that you'll like rob yourself blind. You're like, oh my God, I'm down 10K. Let me try again. Oh crap, I'm down 13K, 14K. Okay. Whew. All right. Now I'm only down, 11K, 9K. Okay. You know what? I made a little bit. Let me close out. That mindset is not the way to trade. You miss out on the big move or whatever. The mindset should have no previous knowledge of your previous loss. Every trade is like a new day. And if you're able to like do that and detach from your previous losses, that's one of the harder things to do. What size account I recommend with my strategy? For prop firms, any of the ones or Ds, depends on your budget for prop firm account. There's really no what size account is good. You always size down according to what parameters they have. For most of them, I always get essentially I follow this formula. You do your drawdown divided by your cost, and then the one that has the best ratio is the one you go for. Usually the more expensive one gives you the most drawdown per cost. Like it scales really well. So essentially for every dollar you spend, how much drawdown do they give you to play with? When you're comparing like 50K account to 100K to 150K account, which one is better? Just do that formula. And it just depends on your budget. Some people get the smaller ones just because they can't afford the bigger ones or whatever. If you can afford any of them, then get the one with the best drawdown to cost. It's kind of like the same thing as, would you buy your stuff at Costco? Well, you can buy it in bulk and get a better deal, or do you not want to buy it in bulk? Same concept. Like, do you really need like a 40-gallon bag of potato chips? Well, if you get it for, 90% off the value of the chip, yeah, that's a reduced cost. So this depends on you, but that formula is what I use. And I usually end up buying the one that has the best ratio, which a lot of the times is the most expensive one. Only if they're Miss Vicky's chips though, yeah. So if you goldfish or have Alzheimer's, you're a perfect day trader. Yeah, pretty much. If you're a goldfish, especially one with Alzheimer's. Tyler says pattern recognition skills come to better in some individuals. That is true. And for pattern-based traders, that would be correct. That's like a math skill set you're born with. Buy-sell trade isn't pattern-based, so I wouldn't have an that kind of thing. But yeah, for like ICT level stuff, pattern-based trading, you'll be able to see patterns. They're not super complicated though, so I think anyone could probably learn it. Tyler is good at seeing patterns. For a personal account, I can't recommend a broker to you because I'm not like a financial professional or anything. There in the futures world, I can't name a bad broker. There's like, it's kind of like this. Every single one of them is good at the job that you need them to do. It's up to you to see which one has the better commissions for what you're looking to get. For straight futures, most people go pretty much the same path. They use AMP, Dorman, Phillip. These are all kind of the edge clear. These are the common futures brokers that everyone uses. Very little difference between them. I use AMP personally. That's who I use. But I mean, you just choose whoever you like. Can't find the spicy pickle? Oh no, you have to Amazon it, dude. My grocery stores don't have it anywhere. Speaking of, I'm gonna order some more of those. The Miss Vicky spicy pickle? Yeah, you gotta order a box of them. Speaking of, did I ever show you guys the defected chip I have? All right, pack of 16 for 28 bucks. Wait a minute, pack of 8 for 14. Okay, good deal. Free delivery before 4th of July. Perfect. I showed it on the MyFunded, but let me show you guys. I have the best chips in the world. Hold on, watch this. I can't eat them though because I only eat them every once in a while because it's a treat. So I have a defective bag of chips. Normally when you have a defective bag of chips, you're gonna write the company and beg them for a reimbursement, or like, I need my money back, or I want a replacement product. I kind of want to write them and ask them for more like this, because it may be like the craziest thing in the world, but the chips are normally seasoned like a little bit, right? Now, these guys right here, I want you to look at this. You see the black splotches on there? Hold on. My camera. Zoom in on this. That's seasoning. Okay. Yeah, I showed it on the MFU stream. This is like normal side a little bit, but the seasoning, it's like overly seasoned to a factor of like 10x the normal seasoning. These chips, like when I opened one of the bags, I thought there was like dirt or something in there. They're literally coated in like black ash. Look at this. That's crazy. Anyways, imagine having a Dorito with 20 times the cheese on it. And inside the bottom of this bag is just like a thick layer of powder. There's so much in there. So I ate one and I was like, oh my God, it's so good. So now I saved them as a celebratory treat. 10x leverage chips. Yeah, there you go. So whenever I have like a good day or something and I want to reward myself, I'll eat one of these chips. I'm keeping it in the fridge so they can stay stay as fresh as long as possible, but these are like the defective spicy dill pickle chips. And so every once in a while, I'll bust out one of those chips. Like if I'm having a bad day, and it'll make me so much better. That throws off the nutrition facts. Yeah. There's probably like, they're extremely spicy and extremely salty. It's hard to describe the flavor, but when you eat one, it's like, wow, it's so sour. Because it's like 10 times the acid flavor normally. They're so good. What's the minimum account deposit for AMP? That's why people choose AMP, Chris, mostly is because AMP is the smallest minimum deposit actually of all of them. That's where AMP does stand apart. It's only $100, and most other futures brokers are usually 500. You new to the channel, Mr. Knife? What's up? Do I mainly trade on NASDAQ and S&P? That's what I normally trade. How many accounts do I trade? I have a personal accounts. So with that aside, I have an ETF live account. I have a My Funded Futures live account. I trade on the stream, Tradeify, straight to funded, and funded next. So I trade a lot of it. Somebody says cheese. Hey, Doritos is made of cheese, I think, mostly. Actually, I was reading a Doritos label not too long ago, and I didn't realize that the flavor of Doritos is actually tomato and cheese. The cheesy flavor, there's some kind of tomato powder in there or something. Or at least the off-brand Doritos I had were like tomato-y flavored. They were so good. Dude, with the extra seasoning, man, it's like, I wish I can have more extra seasoning on those chips, but... Yeah, it might contain like an infinitely lethal dose of maltodextrin. So like limit yourself to 1 chip a week. Yeah, like I'm not even eating them. They're so tasty. Wait, in jail, they would make a cheese dip by adding water to Cheez-Its and then microwaving it? I think Cheez-Its are actually made of real cheese. I'm gonna tell you guys, if you ever wanted like a good queso, I'm absolutely like gonna tell you guys, I can swear by this. I bought this the other day and I've been buying it all the time. And it's at Kroger, but it's actually like, if you look at Velveeta cheese is usually mostly oil, and cheese is like cheese mixed with oil. This is actually just very high fat content cheese. And I bought this the other day, and it's by far like restaurant level queso. It doesn't taste like oily like Velveeta. It's just straight up cheese if you read the ingredients. Kroger brand queso blanco. It's like white and has jalapenos already in it. It's like restaurant queso. And let's see if I can find the ingredients or whatever. It's not like vegetable oil cheese like whatever, like Velveeta. I don't know if I could see the... But yeah, it's... Hold on, it's cheese. It's just straight up... It's like the ingredients are like cheese. It's not... There's no processing stuff in it. It's not like Velveeta. Hold on. Where did I get the damn... Oh. Anyways. It's just a higher fat content than normal cheese so that it's shelf stable and whatever. Get yourself some free-range ground bison and some jasmine rice. Bro, I can't dip my chips in some free-ranged ground bison. This is just for queso purposes if you just wanted a queso. I know, Ty eats well. I eat well too sometimes. I'm just saying in general, I found it sitting on the... I was looking for queso for my Memorial Day party, and I was looking at the aisle stuff, and I was like, you know, I want something, but I don't want Velveeta, because Velveeta is just like vegetable oil. It's like, you know, not good for you. And I was reading the ingredients in that Kroger thing, and I was like, oh, this is literally just like cheese and vegetables. It's super creamy, super good. I wish I could see the direction. I always thought those block cheese things were always like it's so typically what you see with most queso is basically concentrated cheese and sodium citrate. That's how you make a chili con queso if you guys are Mexican food folks. So yeah, this is the ingredients of it. It's like water, cream, protein, annatto. Oh, this is for the orange one. That's the color. Calcium phosphate, cultures, lactic acid. That's to give it a little bit of the sourness that you get. Queso is a little sour, tangy. And then sodium citrate and alginate. That's it. That just is creates that creaminess of it. So there's really no like oil. It's just basically like processed cheese, but it's got the sodium citrate in it. I make queso from scratch by mixing American cheese and sodium citrate. On the 50K expert. So Chris, you have to tell me what the drawdown is on your 50K expert. Essentially, what you're going to want to do is make sure you just have the right position size. I think I did the calculation for that one contract is pretty much as max as you should go. They give you access to 5 contracts. I wouldn't go anywhere close to trading 5. I would trade, for NASDAQ, I'd trade no more than 1. Food health score 31. I mean, dude, it's like chili con queso, you know. It goes good with your margaritas for taco night. It's definitely not like your day-to-day food. It's like high fat, high salt. I mean, it's just cheese. Yeah, like I said, Chris, if I were trading the 50K, I would trade 5 micros to 1 mini max of NASDAQ. Personally, if I was doing it. Max. 5 micros is a great balance. Somebody said 2 to 4 micros. That's a good balance. Yeah. 2 to 4 micros is a great balance. I drink the green juice. It makes up for the cheese. Yeah. For realsies. No more trading from here. It looks like it's still trying to move, but I don't have anything else I can do for now. Okay. How do people have the patience to trade one micro and be content? Well, I mean, some people are starting off trying to pass these funded accounts. That's usually part of it, you know, patience going slow. The revenue is not that high, but you're just still trading and getting your feet wet. It definitely is better than losing tens of thousands to hundreds of thousands of dollars. Like when I got started, we didn't have any of this. We didn't have no prop firms to play with. You go out there and take a stab. We didn't have micro contracts. You kidding me? I'm from the days of dinosaurs. I started trading futures in about 2015. You have micro contracts back then. You had to go full E-mini all the time. Full margin. You had to put 20K in your account, and then your account's up and down $3,000 to $5,000 a day. We didn't get none of this back then. Man. I wish I had micros and prop firms to practice in. Oh, that would have been great. Even a 100K account in 10 minis is crazy. No, I barely, yeah. Two to four NASDAQ contracts a day is $10,000 to $20,000 a day. If you push hard, you don't need 10 contracts for nothing unless you're a maniac. Well, looks like we're kind of settling out and stabilizing. We got boot camp starting in 30 minutes, guys. Don't forget. I might call it so I can go get ready for that. Just start it now. That's true. This is true, everybody. Bum, 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 bum. Yeah, watching oil. Some people say oil was like going to 120 bucks and all that. Oil's been just dying all day. All right. I'll stream till close. I got to keep the numbers high. All right, all right, all right. Ah, last couple minutes of the day. Nice and tidy, clean little market here. How do we finish up? I think we still stay the course. I don't think this is going to be a sell-off event. Market stable, bull zone, liquidity pocket good. Let's double check monthly maps before we finish out. Yeah, back to bull zone. Fund Index is making a direct-to-funded program. But you know me, I love direct-to-funded programs. They're great. Definitely worth the wait. First timer pray. Awesome, awesome. All right, you guys. Well, why don't we take a break? I'm going to call the stream. Let's get ready for boot camp. We'll start up in 30 minutes. Low key want to gamble on MOC. Good luck, good luck. All right, I'm going to save my voice. I'll see you guys later, all right? We'll see you in 30 minutes.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray. Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineered, see the light. Illuminate the darkest night. Rocket scooter has got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside. Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads, no fear. No more guesswork, no more loss. Seeing past the others cross. Institutions will be seen. Predict the flow like a machine. Rocket scooter, you've got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside. Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads, no fear.